and certification and the carbon trading. So we have a very good panel from the different background. So we have Rajiv Kumarji, who is the GM Green from Sidvi. So Rajiv ji, welcome to you and thank you very much for joining with us. Then we have Neha Kumarji, he is the head South Asia for climate bond initiatives. Welcome to you, ma'am. Friends, we have Monica Kaliaji, she is DMD and CFO of NetFit. Welcome to you, ma'am. And we have Mr. Somijit Mandal, who is from the PwC as Associate Director. So he's practicing climate consultancy. Welcome to you, Mr. Mandal.
Thank you.
Then we have Mr. Rohit Kumarji. Rohit ji is Director General of Carbon Trading Association of India. Welcome, Rohit ji. And this webinar we are organizing jointly with PhD Chamber of Commerce. So Resurgent India of Commerce jointly organizing this webinar. So I would like to thank you to PhD Chamber of Commerce for joining with us as partner about their industry members and all. And I would like to welcome to the audience of people who have joined with us from the different background, from industry, different industry also, and from different geographies also. So, friends, the objective of organizing this seminar or webinar is to basically create awareness about the role of the investors, banks, and fintech in the net or zero transition or net on the climate financing side or their all of the organization, how they can support to the climate financing and net zero transition of India. So yeah, you know that any initiative is successful only when the right kind of funding and right time of funding is available at the right cost also. So and where we want to reach and how the financial institutions can help to achieve that objective which our Prime Minister has taken. So I will run through a small PPT which will give you some idea about the thought process behind this conference or this webinar. And then I will invite all the speakers, all the panel speakers, one by one. Those are veterans from the industry. They will give us a lot of insights about the institutions and the net zero transition. And then we will take questions from the audience also, if any question it will be there. So I will request to my team to please start the PPT. The next. Yeah. So friends, we see India having a lot of, I think, leadership positions in various areas of climate. So if you see the CCPI index, we are ranked 7 in the world, and then in the 10. So it's a very good position we see. Then in the solar power installed capacity, we are at 6. And we see on the biogas production, we are the second highest or second largest biogas production capacity globally. So we are, I think, in many places among the top 10 largest player in the world. So India is already doing many things on the climate action. Next slide. So this when we are talking the net zero, basically practically if you see our Prime Minister has announced committed in the COP26 in November 2021 about the India aims to achieve net zero emissions by 2070. The beginning started from there actually. Then we have taken some targets also that we will achieve 50% non fossil fuel, and then we have created the International Solar Alliance also. Initiatives have been taken after that. Next. If you see the our position in terms of our target, so although we are in the last in the overall journey of the net zero but we are going ahead actually. So there are many countries which are planning to plan to reach net zero transition by 2050 and 60 also. But but the way we are growing or we are working, I think we'll achieve this target much early than whatever we have planned. Next. So and we have seen that we are in the leadership position, but it's a long way to go ahead. So in terms of our position in the carbon profile, we are still generating electricity through coal and all, which is a industrial sector. Our industry is also, I think, emits substantial greenhouse gases. Then transportation still we are dependent on the fuel which is basically not climate friendly. So our number of vehicles are increasing rapidly. Then agriculture use also, and then the waste management. So these are some of the areas where I think, we have to do a lot actually. Next, government has taken a lot of initiatives on the climate action side. So if you see the energy trading platform, BRSR is a new thing which the government has announced that 1,000 companies, listed companies, top 1,000 listed companies are required to do the ESG reporting to the annual report. So that's a very good initiative. Then phase one, phase two, this for electric vehicle, the government has announced these schemes. Green corridor, green energy corridor is one of the area where government has created this transmission lines and all dedicated transmission line for the green energy transmission. Battery swapping policy, then ESG rating guidelines is a new thing where the government has announced, or SEBI now the nodal body regulator for giving the licenses for green rating. And very recently, you have seen three agencies have already taken the green rating licenses. So CRISIL, I think, has taken, equity has taken. And at Resurgent India, we are also planning to go for the green rating license. Then the PM Surya Mukti Bijli Yojana, this is mainly for the rooftop solar at the houses. So this is a scheme where the government is giving a lot of incentives, lot of subsidies also. Then PLI scheme where they are promoting the solar module production, manufacturing and all. There are a lot of incentives are National Green Hydrogen Mission, where I mean, they have taken very large target for generating green hydrogen in the country. Then the duty reduction on this. So there are many areas where the government has taken a lot of initiatives, and which will help us to go this net zero transition faster and faster. Then now we should see that the green financing, I think, for reaching of the net zero transition, green financing is the important part. So next slide. We'll see that how the financial institutions are helping in that actually. So if we see the numbers, the global goal is something around this 125 trillion funding in 2050 for meeting out the net zero transition. And if we see India, at least 10 trillion is required by 2047 actually. So 10 trillion, if you see our current GDP, something around 3 trillion or something, and we are talking about 10 trillion green financing requirement actually. So it's a big number actually, which need to see that we have to see how it can be achieved. Capital raising and all, if you see, uh, so there are many institutions like SIDBI and all. And we see, so at Resurgent, we have identified something 10,000 companies which are already registered in the government portal MCA. And they are registered as green companies which are falling in the green sectors actually. So this number is increasing day by day. Out of that, I think 1,600 companies are there which are already having credit rating. So they are readily available, or they are ready for raising the larger amount of funding from the different channels for their the projects which they are executing. Next slide. These are the big opportunity for us. How the bankers, the investors can play the important role in achieving the net zero transition. So I think for climate action, for climate financing, each of financing is very, very important area where there are many areas where the institutions can work out that how the each of financing can be done. Green deposits, if you have seen in many banks have started raising green deposits, which will help to put money in the green projects. Affordable ROI. So whenever the developers are executing project, they are looking some financing because these are the long term projects where the viability taking time will take time. So the very requirement of long term finance team for green projects. Like I was seeing that we have CDB in our panel. They have a green CDB actually. So like this, every financial institutions, every investor should plan that there should be a separate vertical, separate team for the dedicated green projects actually, which will help to have the faster resolution or faster appraisal of these projects actually. And then technology is one of the area where I think for appraisal and all we can use the good technology which can help like how to onboard the customers, how to assess the customers. That will also help. And then you see the RBI should also they have covered to some extent the green financing under the sector criteria will be there in a larger scale. Then the lot of corporate will be excited to come into that segment also. Next, yeah, next slide. The challenges of green financing, as I already discussed that the financial viability is one of the area where I think all the financial institutions are facing that how to work out the financial viability of these projects and access of data and information. So this is another area which is a gray area for financing. Then the risk assessment and technology risk assessment because many times we have seen that new technologies are coming in these projects. So technology can be assessed. This is another policy and regulatory uncertainty. So there are the areas where we have to see that how these challenges can be overcome by the green certification is one of the very important area where we call green washing actually, which is a threat in the industry. So we have Nehaji who will discuss on the green certification, how the climate bond initiative is helping in the green certification. Next. So I think everybody is aware that the gift city is country within the country, and the government has given a lot of incentives. And they have taken one more initiative also. They have created the ecosystem for raising green financing in the gift city. So gift city is ahead of the Indian domestic market and the financial market in terms of green funding initiatives. So they have created the exchanges where they are equipped to raise to certify or to basically launch the green financing or green bonds. Then they are organizing a lot of events and programs for the green financing and they're inviting all the stakeholders. Then they are collaborating with the international organizations also and the banks. And the major part is that the government has made it compulsory that 5% incremental advances by any bank in the gift city should go for the green project or sustainable project actually. So this is some kind of compulsion where I think everybody will think of utilizing funds in such manner actually. Next. So India so far in terms of financing on the green side. So, for some data, I think we have raised something around 20 billion US dollar funds in the green bonds. And then the government has also come out with the sovereign green bond of 16,000 crore last year. And in terms of installed generation of this non-fossil fuel energy, something around 186 gigawatt. IREDA is also having the large target and they are disbursed something around 25,000 crore. And there are many private funds. Those are already investing in the green companies or green projects. Next slide. Yeah, next slide. So, what we understand, these are some of the factors which falls under the green sector. These energy solution, biofuel, hydropower, wind power. These are wastewater treatment also, and EV segment also. Next. So, as a responsible citizen, we should also be the part of the net zero transition by way of these activities or following these. I think this will help for us to be the better India also, and we can have the better future for our children. Next slide. So not only the large corporate, the government is giving the lot of incentives to the MSME sector also, where government has come out with the green, the credit guarantee scheme, technology upgraded fund, clean development mechanism also, and there are many incentives which are available. There are lot of ease of financing in these areas, which will help us uh, uh, to the sector to get the advantage of these things and be greener, more greener in that the overall journey. Actually. Yeah, next slide. So role of Resurgent India in the net zero transition. So we have a dedicated department for helping the corporate in the green financing side, whether that equity or green bonds. We are going for ESG rating license. Also, we do valuations and the TEV studies on the green. We have done many TEV studies also. We do advisory in the green sector also. So, like this, we are having a dedicated vertical for training also on the green project appraisal and the research this assessment in the green side also. So that is all from my side, sir. So I was just thinking that I should have some data points so that I can set the context of the program. So, if you see, I think net zero transition is very, very important, although India is having a target of 2070, but we need to achieve it as fast as possible. So, we have veteran industry leaders who are basically in the different fields, financing, certification, or carbon trading also, and advisory also. Now, I would like to invite the only panel speakers for their deliberations. And so we have Rajiv Kumar ji, who is from SIDBI, and Rajiv ji is the GM of SIDBI, actually, who has more than 27, 28 years of experience in the SIDBI, actually, on various MSME funding and the MSME appraisals and risk assessment also. Now he is leading the practice of green in SIDBI. So first of all, Rajiv ji, welcome to you. And so, Rajivji, we would like to understand from you, from CDB point of view, what is the specific criteria by the CDB used to assess the eligibility of businesses for funding under the green financing? So, practically, for projects which are higher environmental impact, high environmental impact also. So, sir, over to you, and thank you very much for your dedication.
Thank you, Ashish ji. Thank you for having me here. As you're aware, SIDBI is a development financial institution, and our mandate is to promote finance and develop the MSME sector in India. And one of the major, community affected by climate change is the MSME sector. So in terms of vulnerability, MSME sector is considered to be the most vulnerable to the climate change impacts. And that's why SIDBI has taken this initiative. We have set up a exclusive green climate finance vertical, wherein we have devised programs for financing green projects in MSMEs. And also we are doing number of developmental initiatives basically to sensitize the MSMEs, handhold the MSMEs, and make them aware with regard to the benefits of becoming greener and cleaner. Uh, in terms of financing, we have got uh, basically five theme areas in which we are working. So, first one is energy efficiency. Second is solar rooftop. So we are promoting MSMEs to put up solar PV plants in their rooftop. Third is the e-mobility. We are also encouraging MSMEs to adopt electric vehicle for their commercial uses. Fourth important thing is the waste sector. So we are helping the MSMEs to basically set up their manufacturing plants and the units for maybe compressed biogas or waste to energy plants, so that waste problem in India can be sorted out. And the fifth thing is the adaptation, which we have recently picked up, and we also are working in the adaptation so that we can make these MSMEs more resilient and adapt to the climate change impacts. So these are the five missions under which we are working. For we have created our own set of taxonomy, wherein we have identified nine sector and 61 activities which we call, which only those activities are called as green. And then we also have devised a simplified ESG filter mechanism. So each and every green loan has to undergo through that filtering, ESG filtering, and also assessment of energy saving and the reduction of greenhouse gas emission. So those things we are doing on the in the financing side, and we have, during the past 2 3 years, we have seen very good traction. In fact, last year there was around 16x growth in our portfolio, and last year also we have disbursed more than 6,000 crore worth of loans, green loans to MSMEs. Now our focus is basically to encourage other lenders to also take up green financing, and through that, for that we have launched various risk sharing facilities, wherein we are giving guarantees to these banks, NBFCs, etc., to do green financing, and we are willing to share a portion of that loss if it is incurred, um, if they finance for green projects. Besides that, SIDBI is also taking up a lot of developmental initiatives in the e-mobility side, in the energy efficiency side, and we are helping the MSMEs to take up energy audits, for the cost of which we are reimbursing major portion. And in fact, over and above, if they implement whatever is suggested in the energy audit report, we are further incentivizing them. So for that we are running a program called E4E. We are also working with states like Green Goa. So we are a part of that Green Goa. So wherein SIDBI will be helping, supporting the Goa government to for greening of Goa. So similar many initiatives are going on. I'll stop here and happy to answer any questions.
Thank you, Rajiv sir. Thank you very much. I think we'll be doing a lot of things actually. We were not aware. I think many of us are not aware about that actually. And you have achieved the milestone of reaching 6,000 crore worth of loan in the green sector actually, which is a very big thing actually from the city point of view. You are increasing this number also. Credit enhancement, yeah, which you have, I think, spoke in your discussion that you are doing great credit enhancement for the corporates or MSME where so that they can be eligible for the funding actually with the different institutions. But one more thing which is always, I think, under discussion when we are talking the projects which are having higher environmental impacts. So, is there any advantage in terms of pricing or other components which are like DSCR or margin fund, the promoter margin, the long-term funding, and also is there any such things are there which you already designed in the green financing mission? If you can highlight
Yes,
on that, sir.
yeah, absolutely. I mean, I would like to give highlight of that. All the green loans are basically these are highly concessional loans, and from our normal financing scheme, these loans are priced at least 1 to 1.5% below our normal pricing. So, even in some cases, we are also going below our cost of fund. So, so all the loans, one is the concessionality. Second, with regard to there are relaxed collateral norms, and in case there are projects, innovative projects wherein asset creation is not happening, collateral is also not there. We are covering such projects through our risk sharing facility mechanism, wherein I mean, on behalf of that promoter, guarantee is given by SIDBI for that loan. So that facility, with the support of World Bank and GIZ, we have already launched, and we have covered number of projects there. We are also promoting innovative business models like energy service companies. So for that, actually, these energy service companies are technical service providers who create energy at a third party location. So while creation is happening, the assets are created in a third party premises. So earlier, these ESCOs were not getting any loans. For that, we ran a program called Partial Risk Sharing Facility Program, wherein we have supported more than 79 ESCOs worth around USD 120 million. Projects have been supported, and we have also encouraged other banks to come up and do this financing, and around 14 banks are partnering with us in such financing. So I mean, we are we understand that for green financing, because of the increased compliance cost as well as the higher technology cost, the terms have to be concessional, and that's why SIDBI has designed our program like that, and we are seeing good tractions among the MSMEs.
Great, sir. Great. So we have almost 6 crore SME or MSMEs in India. I think these all will get benefited from the SIDBI schemes or the SIDBI support with the, along with the other 14 banks where you are already tied up. So great, sir. I think you are doing a good job for the MSME sector. And I think other financial institutions will take the lead and will, I think, learn from you and then will also start working on that side also. So thank you, sir. Friends, now we have Swamijit Mandalji, who is the Associate Director with PwC. So, Swamijit ji, first of all, welcome to you. And Swamijit ji, would like to understand, being the global consulting firm, how you are basically at PwC helping the sector or helping in the net zero transition of India actually. So that is one part which we like to understand from you. And then we would like to ask a question from you also that what role do you see for the digital technology in enhancing the transparency and accountability of climate finance actually? Green washing and all, this is a term which is, I think, discussing everywhere actually. So if you can highlight on that, that'd be great.
Yeah, thank you. Thank you for having me, Mr. Agarwal, and honored to be among such dignitaries. I'll try to be short because I'm sure there's a paucity of time. So quickly about PwC, what we are doing in the climate domain is that we are trying to cover end-to-end all the services possible and solutions, especially on the solutions focused services on both the mitigation and the adaptation front, covering more or less the three or four major pillars of finance, technology, policy, strategy, disclosures, all these things. wherein risk assessment and strategy and climate resilience is one of our like the focus of the team that I am part of. So that is a quick summary of like what PwC is doing with covering the entire thing. And we are, of course, working across geographies, working for both the public sector, private sector, as well as for the not-for-profits. Yeah, that is a quick introduction of what PwC is doing in the climate domain. About your question, I would just start by maybe adding to your what you have already given a very exhaustive presentation. Just wanted to add a couple of things to set the context, which is that when you're speaking of climate finance, there are of course two parts. There's the mitigation finance and there's the adaptation finance. And it will be like it is quite remarkable to note that the climate finance is being mostly driven by the mitigation finance, which comprises like more than 95% of this entire climate finance, right? And there's been some growth in the last 3-4 years, some a bit of like exponential jump, but we need much more because current flows represent only about like 1% of the global GDP. And the climate finance by the current estimates must increase by at least like fivefold annually as quickly as possible in order to like avoid the worst impacts of climate change. We are already seeing quite significant impacts, and it's no more in the future, it's now what is happening. Climate change and all these things, it's not no more an emerging risk, it's current risk. We are already feeling the brunt of it. Coming to your question, quickly, like on the what the role of digitalization of climate finance and how they can help the climate finance. Maybe we can break this into two parts about the what can be done in the general finance domains, and then how can digitalization help with maybe a couple of examples. So maybe firstly, it's like reforming in the on the global front. Basically, reforming international financial institutions is already gaining significant traction, so that they're like uniquely positioned to take more risks in from SIDBI, like Mr. Rajiv sir mentioned, how they're providing more, giving more risk guarantees, giving more concessional loans. So all the financial institutions need to be reformed in order to take that unique position to like take more risks, channel innovative finance, leverage constitutional finance, and to like expand the private flows. On the private sector side, of course, we really need to see all these net zero commitments to translate into reality. Second thing, I was talking about adaptation finance. So mainstreaming adaptation and resilience, we being more resilience focused, we have felt that mainstreaming adaptation and resilience is going to be very important. So it is necessary that adaptation activities across all financial systems and major infrastructure is like integrated and mainstreamed. Phasing out fossil fuel, of course, through a just transition is a priority still. Just transition, that thing within quotes, is very important. Is a priority. It's a priority, and investing in clean energy and mobility, which is mostly happening now, that will not be sufficient. So we need to invest in the other climate tech that needs to increase like exponentially, especially in food, agri, land use, built environment, the buildings, smart GHG capture, storage, and then mostly like the climate data and earth data generation for the financial institutions to more understand the climate risk that is there. Of course, mobilizing the domestic capital is very important, reducing dependencies on international capital. So that will include aspects like aligning the NDCs with the 1.5 goal, having compatible scenarios in addition to like have ambitious policy frameworks. And it is very important to like create a local ecosystem for climate investment so that domestic capital actors can have the capacity and know-how to issue green bonds, attract capital from international capital markets, and so on. But most important is acting to improve the data. Uh, because high quality climate finance data is super important to understand the investment gap and building effective solutions, informing the investors on where to prioritize next, right? And right now, the challenge is that all data is scattered across different sources. They are not very much standardized, and not many people has an obligation to report on climate finance, including like domestic public budgets and private finance. So it's a very heterogeneous data set, and entities need to work with, especially the financial institutions in collaboration with the regulators and everyone. Uh, Specifically on India, a quick maybe overview. India definitely needs to work on the green taxonomy, on the national front, because it will help in scaling up green finance, tagging the right things. It will reduce uncertainty and build, of course, the investor confidence, address greenwashing. That is a very important thing again, and it needs to like increase maybe financing in the decentralized green activities that need like earlier stage intervention. So that I mean, for that it may start investing in like technology research, development, adoption in the early stage things, and then support for setting up the infrastructure for that, and then mainstreaming supply chains. Of course, that will help in the uptake of the entire thing. Three quick recommendations on the role of digital finance. Uh, uh, Maybe India can like start exploring, developing a green bank. Second is that we can have an integrated measuring MRV, sort of digital MRV system, measuring, reporting, and verification system, because the last few years we have seen very good accumulation of online data, availability, accessibility of online data. So a digital MRV can provide a uniform framework and methodology to track finances, identify challenges, where we can prioritize, where additional finance is needed. Then it can also enhance credibility, transparency, these things. Uh, India maybe can think of, or the financial institutions especially can think of like setting up an MSME climate finance platform. I mean, SIDBI can, institutions like SIDBI and the Fintechs and other banks can collaborate to develop a like India-wide climate MSME climate finance platform, because MSMEs really, I mean, lack that understanding or do not have that desired level of understanding and motivation to fulfill the certification requirements required to get the climate finance, then do not have the credit scores, they very have not very clear understanding of the impact assessment for the complex application procedures, right? So, and on the other hand, the climate finance providers do not have the visibility of potential climate assets or the existing climate interventions that are required, right? And India as a whole like has got the right infrastructure and enabling environment for an online platform now, because we have India Stack, we have the MSME databases, we have JAM, the Jandhan, Aadhaar, and the mobilities and everything. We have direct benefit transfers. So data analytics and coordination wing of government, the DATC wing of government, can help to understand the vulnerability of any given like MSME to on the climate risk front, right? Uh, Finally, I think we should talk about the LIFE initiative, the Green Credits and the LIFE initiative, Lifestyle for Environment, which the Indian government is starting. Uh, Maybe not very much in the far future. I mean, it's quite near. The frameworks are already out. So maybe we can think of a like blockchain-based framework for like successful establishment and implementation of the life framework and the green credits thing, maybe on a three-pronged thing, like rewards to give the financial and non-financial incentives to all the sustainable practitioners, reinforcement which will like nudge the participants towards eco-friendly practices, and maybe the restructure, which is the third pillar. So rewards, reinforcement, and restructure. So restructure will take the learnings and then start at looking to modify the entire infrastructure. So this can be a sort of like 3 or 4 digital interventions that may quickly happen. Thanks.
Great, great, Swami Ji. So, am I audible? Hello. Yeah. So, thank you very much. I think you have covered very well on the digital part of the climate financing or green financing, and your suggestions are very, very good. Actually, we'll definitely pass on these suggestions to the concerned authorities also, and we are after this conference, we will all stakeholders. So Green Bank and the MSME platform, all these things are very, very important actually for creating a good ecosystem in the entire climate financing of India. So thank you very much, Swamiji ji, for your deliberation. Friends, now we have Ms. Neha Kumarji. Neha ji is the head of South Asia for the Green Climate Bond Initiative. So I was interacting with her last week. I think they are doing many things which are not known to the our industry or our financial institution. So that's why we thought they are very important for us basically in this webinar. So Nehaji, first of all, thank you very much for joining with us. And so we like to understand what is this climate bond initiative, first of all, because many people are not aware actually. Then we like to know that the what are the expectations from investors in green bonds. I think you are specialized in green bond certification. And how can business ensure they meet the expectation of to secure funding actually. So mainly the green bond related aspects basically. So many of the Indian corporates are talking to us and they are looking to raise green bonds. I think still the number is very few where they have raised money actually, but there can be many corporate groups which can go to the international market and can raise green bonds actually. So over to you and thank you very much, ma'am. You are on mute, ma'am.
Always the case. So thanks a lot for inviting me to this discussion today. And there are colleagues on this panel who we keep interacting with. So there is an ecosystem within which now many organizations are participating and shaping and leading the market development activities, as well as many things that are required on the policy front. So quickly to introduce Climate Bonds Initiative. Um, we are an international organization. We work globally in developed as well as developing economies. And our theory of change is that when investors can actually demand action for change and really a large scale capital allocation or reallocation can happen. So we are investor focused, we are demand focused, but that is not to say, that is in fact to say and emphasize that once there is demand and once there is large capital flowing, there are also equally important triggers and policy signals that are required to introduce scale and speed at which the finance needs to flow to the right destination. So we try to build large sustainable finance markets. And here, sustainable finance, when I say, of course, it includes lending, loans, etc., and all other sources of finance. But we are focused on bond markets because they sit on large volumes of capital. So imagine the global bond markets are nearly $130 trillion. And what if a good amount of these capital markets was to actually find the right kind of projects where large climate investment needs can be financed. And to just emphasize one point over here, that capital markets are actually very amenable to the climate investments required. There are a couple of reasons for that. When you go for bank lending, there is generally an asset liability mismatch when the investments that are required, which are climate oriented or sustainability oriented, they are generally they require large upfront investment. They require very, very long periods of investment. So that bit, not all banks face a natural constraint in doing that kind of financing. That is not to say that the lending by banks should not be greened, in fact, more so. And in the context of India, where the maximum part of the economy is bank financed, their own lending needs to be much more green, and banks themselves can also tap the sustainable finance markets, which, by the way, globally, if you speak of numbers, nearly $4.2 trillion of different kinds of thematic debt has been issued. And this growth, and it is growing, and this growth has been exponential, from $2 billion way back in 2007, when your first green bond was issued. Now we're in trillions of dollars. So 100 times the growth has happened in a very short period of time. That only shows that there is something there which is working. And it is, I think, the simplicity of structure that when it came up in terms of green bonds, and it was that it was a normal bond with green features in it. So it wasn't a new instrument, it was an existing instrument which had now which had now been repurposed to align to green goals. And when I say this, there is one defining feature, which is that whatever money that you raise, it needs to go to the intended purpose, and which means that you will have to show that your use of proceeds are transparently allocated, they are verifiable, they're externally verified, that what you're calling green is actually green, and they are basically being deployed to the stated intended purpose. This transparency feature is the defining feature when you talk about green finance, which now includes loans also, equity also. There's a whole lot of, any instrument financial source can actually be called green. So the labeling aspect of green becomes extremely important. And self-labeling, which is also in practice globally and in India, um, has actually raised many concerns around greenwashing. We've already talked about that. So globally, not only the investors, but also regulators are extremely aware of this challenge. In fact, SEBI itself, has it has released many circulars around ESG and green bonds themselves, but it also released a circular on do's and don'ts of greenwashing. And here I would like to just give you a state of play for India. I just told you $4.2 billion, trillion dollars globally. If you look at India, your data from Terry showed 21.6 billion. But actually, because climate bonds also tracks all labeled bonds. So we have let me go back to defining or introducing what we do. We set standards, we set definitions which are globally recognized by investors as well as issuers. In fact, in India, the definitions are widely recognized, and also the certification scheme backing those definitions is also widely used. But we also do a lot of market research and market intelligence. So the data that we collect is also picked up by many green indices, and we have a database based on which we include screen out or screen in certain labeled debt. So our data shows that by the end of 23, $41.6 billion of green, social, sustainability linked instruments were issued out of India. Dominant theme remained green. Dominant theme globally also remains green. However, many such thematic instruments have come into the market, which is to show that people are actually looking for the directed spending. They're not like, okay, you call yourself green and then you just go anywhere. That said, we also have new instruments. So what happens with, say, a green bond is that a solar asset, very visibly green, of course, backed by verification, etc. You have the user proceeds going to that asset. But what about those industries where such technologies do not exist? They could be steel, they could be cement, they could be chemical. There's a whole lot of activities or economic sectors which are transitioning. So even when you don't have a technology and you require money, so there are new instruments which are coming up, which are called sustainability linked. And I would like to tell you this difference is that they're outcome linked instruments. So you predetermine the emissions reduction target, and you then follow a certain pathway, you commit to it. If you achieve the target, there is a step down in your coupon that you have to pay. And if you do not, then the penalty is in a step up of coupon. I just mentioned all of these things to connote the expansion of this universe. So there is opportunity, there is investor demand. This investor demand, however, is largely offshore demand. Within India, I think that investor base still has to be unlocked. However, it is not as if it does not exist. I think it is very fledgling, with some support from regulatory agencies, some support from policy. If this our pension funds, our EPFO, the insurance companies, etc. Between EPFO and LIC in Indian market, we're nearly sitting on $1 trillion, right? So if you were to actually channel some money over here and create some kind of dedicated green capital that assures minimum supply of green capital, demand will build on that. So in India, I think lots of things are happening. I mean, what Mr. Rajiv Kumar said from SIDBI, right? The idea of concessionality, when we talk to banks, they will be hesitant. Well, okay, why? Unless they get some incentives, they will not have enough room to pass on something to the customers. And you talked about compliance costs. So yes, there are more systems that are required, but we have also seen that compliance cost, the cost benefit ratio actually gets evened out. State Bank of India recently told us that they did a green loan, and the first instance of it, of course, there was more work required. But in a year or two, everything got leveled out, and they actually were able to get or distribute loans to place loans where they were required. So in short, there is market demand. Domestic market demand has to be unlocked further with policy and regulatory signals. The issuance of sovereign green bond is a very good signal, but we have to build upon its success quickly. We can't let that, okay, 2 years ago, the first green sovereign bond was issued. There were regulatory relaxations in that issuance. It was a domestic currency bond. It was onshore. It was open to international investors. They were given a fully automatic route to invest in it. The insurers and pension funds also, they were told that you can invest in all these bonds and it will be counted against their infrastructure investment. So all of these things will be required to be done. I can say that SEBI itself is now very proactive. However, all of these regulations are new. They will take some time to get socialized. And in that socialization, I think a lot of actors, some of them are here, whether they are commercial entities or non-for-profit entities or development finance institutions like SIDBI and NAPFID. I think the dots have to be connected. More collaboration has to happen between these actors to nudge the market in the right direction. The pipelines do remain a large sort of lacuna, because when we talk to investors, they said, give me pipelines of investment and give me credibility. These are the two things they actually ask for. So we have to say that, okay, in renewable energy, utility scale market is mature. You don't have to do too much over there. They're big companies. They can raise money in domestic market also and in foreign market also. The companies like Renew issued the largest ever green loan in the last quarter of last year, which was $7.8 billion. And that's not a small thing, right? And so the size of these deals with large companies tapping foreign market is pretty large. They're all benchmark issuances going above 300, 400, USD. The idea is to actually get a lot more projects in the pipeline, make that visible. And I will go back to what, Somajit was saying, that making them visible, the singular thing that you require in the ecosystem to identify what is green and what is not green is a taxonomy. And that taxonomy is a work in progress. Ministry of Finance had set up a task force 2 years ago. Now everything is now becoming years ago, right? So we have to, the thing that I find, while there are so many pockets of excellence, is that we somehow sometimes lose momentum in terms of the policy clarity, policy signal, coordinated policy action that is now required to give the push, to give the scale that is required. I mean, you talked of numbers, the financing gap. Leave alone 2070. Most of our net zero work will be front loaded. If you do not make investments in this decade, the cost of inaction will be much higher. what is better, to build your new stock which is green, or to retrofit everything which is much more expensive, right? So I think it is pretty logical in terms of where we should be headed, but the interconnectedness of things needs to be given a much more concerted push. I will stop here. You did ask another question: what do investors want? I could simply say that issuers have told us, treasuries have told us that because of investor diversification, which comes because of green, the price gets tightened, they land a better pricing deal. All of them have given us this sense. We do in the global markets, we do some research as well on pricing benefits. So there is something called greenium that gets, but that is dependent upon many factors. And one of the major ones is that the demand for these products is higher than the supply. And if you are credibly green, then the investors are ready to give you some benefit. But these things will become much more visible in the Indian context when there is much more volume. So issuers have to get diversified, more sectors have to come into play, and more types of instruments, more types of financial structures. So it InvITs, for example, there is REIT Embassy as well as Virescent InvIT, which issued a green bond in India. More of these structures can bring more green projects into the pipeline. Plus, I think what the DFIs like NAFIT and SIDBI are doing will be absolutely critical to giving the push that is required in India.
Thank you, ma'am. Things about green bonds and the what has happened till now and what should be done. And your views are very, very important for all of us. Now we have Ms. Monica Kaliaji. She's DMD of and CFO of NEFIT. So, ma'am, first of all, welcome to you, and thank you very much for joining with us. So many of our audience will not be aware what is NAFID actually. So people would like to know that because it's a new baby in the entire infrastructure financing ecosystem. So people would like to know the NAFID actually, and then would like to know what the NAFID is doing on the green infrastructure financing or green financing actually. That's the important thing which people like to understand. And along with that, I think we would like to understand some more things also from you. How does the NetFit plan to support new infrastructure areas such as the data centers and battery storage facilities actually? So this is a new sector, or I think huge investments are required in that actually. So over to you, and thank you very much.
Thank you, Agarwalji, for having me on this panel. I think let me take the first question. What is NAPED? What do we do? As I think Neha has already raised the aspirations from NAPED. Nonetheless, I think for a greater audience, I just say NAPED is the new kid on the block. It is basically a national bank for funding infrastructure and development. It is essentially a all India financial institution or a DFI for infrastructure funding. So the act came in 2021, and our operations started in December 2022. So we have twin objectives. One is lending to the infrastructure sector, and second, development of the ecosystem, which I think Neha also talked about, Somajit also talked about, and SIDBI being there, they are already trying something on it. So what we are doing here is, number one, when we are funding to the infrastructure, we come with, two distinct benefits to these infrastructure companies. One is that we have the ability to give them the long-term funding, which generally the commercial banks are not able to give. So long-term, when I say, we can go up to 20, 25 years of a funding kind of a structure. And second is that, we are able to give them a 3-year or a 5-year kind of a reset period also. And if they require a longer reset, we can give a longer reset also. So essentially, when it is going to be intertwined with your second question, when you're saying, what are you doing for the data center and battery storage? Because they are probably requiring huge kind of an investments. Not only they require huge investments, they are also, are in a stage, specifically the battery storage, where a lot of innovation is happening and the technology around it is not stabilized as such. So, it is not only capital intensive, but maybe more riskier funding to be done. So NAFED, while business does take care of the business risk, but what we are trying to say, why do you want to take the risk also? Let that interest risk be taken by us. We are willing to give you a fixed rate of interest there. So this is something we are doing. And apart from this, at NAFED we are planning to set up sector wise specialization in each of the sector. So if we talk about the new sectors which are coming up in the industry, so we are engaging with those specialist institutions, maybe global DFIs or global organizations who have already done some research on it, which can help us understand the sector better, and hence we'll be able to structure the deals in a better manner. For example, most of the funding what we have seen in the past has gone wrong because the repayments were not scheduled as per the requirement of the project finance. So this is what we are trying to bring in, the specialization, so that we are able to structure the deals better. And when I was looking in your presentation, I think you aptly said that there is capital available, but we need to have different kinds of capital which need to be available. So while the capital is available, whether there can be more of the funding which can come in the mezzanine finance, or which can be higher risk taking in their subordinated debts or something, which can be having a higher risk capability, so that these kind of fundings help these companies to do more of innovation and sustain a blended finance kind, which can lower the cost of their funding. So while we are able to do a funding which is absolutely as on date less than the MCLRs of various banks, but then whether a blended finance structure can come into the sector, which can help bring down the cost further. We did talk about the credit enhancement. SIDBI is doing some of it. So we are also actively engaging with the regulator. We have seen that specifically in the credit enhancement state, one or two deals were tried by IFCL, but they could not sustain. There are regulatory issues around it with respect to the allocation of capital, what as a banker or a lending institution we need to keep on our books. So we are engaging actively with the regulator to allow some of the changes in those regulations, so that the premium what we charge for the, or the fees what we charge for the credit enhancement product becomes viable, and the cost benefit which is arriving to these companies become much better. So this is something what we are looking at. Along with that, we also I pick up something from Somajit when he did talk about the availability of data. I think we had an interaction with the finance minister a few days back, and after that, the press release came out, which actually advised us to focus on creation of a data repository for the entire sector. So what we are trying to do is bring in the entire infrastructure data which can be available with respect to the funding of the infrastructure project, right from the conception of the project to the implementation of the project, then to the funding of the project, and then the monitoring and the repayment capacity and the cash raising capacity of the project. So once this entire data comes at one place, it becomes easier for many of the lenders or the policymakers or the regulators to take the decisions on particular industry, particular geography, and whether even if Neha said that if we raise something in the name of green finance, it has to be used for that particular project. And in the latest COP28 also, we heard some of the members saying that while green financing is being talked about, but whether the end use is ensured for the purpose for it was raised, that is not very clear. So we are trying to build up this database, and through the technology that this should be available to everybody to see that whatever the country has raised in the name of green finance, that is actually been raised used for the green. And of course, to begin with, we are as of now saying that whatever the Indian regulations are on the environment, on the social infra, we will be sticking to that. But as and when the taxonomy becomes more clear, it becomes more robust for the country to have a clear understanding which is at the same pace for everybody. And once the taxonomy becomes clear, I think the role of the organizations like Climate Fund and all becomes more important, because then the certifications which they do around it become more authentic and give a more credibility to the entire ecosystem.
Thank you, ma'am. Thank you very much for giving the
Otherwise, I would
background.
just like to add one more thing
Yeah,
into it.
please, ma'am, please.
There is, one more step which regulator has taken. Regulator has issued draft guidelines on disclosure framework on climate-related financial risk 2024, which are, going to become applicable for all scheduled commercial banks and all India financial institution from the financial year 25-26. So we still have a reaction time of 1 year, but more importantly, we looked at one of the McKinsey report which came up in 2019, which says, roughly around 45 to 50% of the EBITDA of the commercial organizations is also at risk because of this. Because the companies will need to transition to these to meet the net zero goal of the country. So whether we are pushing enough to these organizations to move in a very smooth manner so that these EBITDAs of various organizations don't come under risk. So while you posed a question whether there is a greenium with respect to raising these funds, I would say if we are like we saw last time when Government of India raised the bonds, 6 basis point is something which was given to them. But can there be a additional non-compliance risk to the companies who are not ready to transition? I think that is also coming in a big way now.
Yeah, thank you very much. I think what the NAFID is doing actually, and how this green financing can be helpful to the entire infrastructure and the overall corporates also. And you have covered about the regulator, what the regulator is doing also. So great, I think, I'm very surprised to know that you are doing a lot of things actually in the long-term funding and the concessional funding also. So I think infrastructure is looking for these kind of incentives. And the one more thing which we have seen also, the long-term funding is not available with all the institutions in the country, even the banks also, because of deposits are not long-term actually. And many times they are doing the appraisal of the project, the developer is asking 20 years, they are saying we can go only for 15 years because of our policy. And developer is bound to take 15 years, and then later on this project is getting haywire in terms of the project viability or repayment and all. And then we are blaming to the developer that why is it taking 15 years of funding actually? Because there is no choice to him actually. So like that kind of organization will be definitely infrastructure developers, and there is a huge requirement of infrastructure funding. So thank you very much, ma'am, for covering it. Friends, now we have Rohit Kumar ji. Rohit ji, the General Secretary of the Carbon Trading Association, and which is, I think, carbon trading we have heard since last 15, 20 years actually, but practically a lot of awareness is required actually. There is a lot of misconceptions are there. So first of all, Rohit ji, thank you very much for joining with us. So we would like to understand how this carbon association is helping the green financing or the green system, and you can highlight more on the current the benefits or the advantage of the carbon trading to the developers, so that everybody will do, because many of people are not aware that they can get the advantage of carbon certificates also. So
Right.
you can guide us that how the various categories of corporates and the MSME can take the advantage of it. Over to you, and thank you very much.
Thank you, Asisi, for inviting me. So I will just recorrect that the association name is Carbon Markets Association of India, and I'm Secretary General right now in CMAI. So I have a small
Yeah, sorry about
presentation.
that.
Asisi, can I open the presentation?
Sir, how much time it will take? Because time we have kept the time for 5:15. If
I
you
will
can
only
cover
take
up.
5 minutes. I will quickly fast go through because this is a very technical
Okay.
subject.
Okay. There is. Can you run the presentation? Do you have the presentation?
So I can share this. I have a presentation. I can share this
Yeah,
so
yeah,
that
you
I can
can
go
please.
fast.
David, please allow him to go the case the presentation.
Sure, sir, sure. Sure, we'll make him a hostess. Yeah.
Yeah. Can you see the presentation now?
Yes, sir.
Yeah. So I'll just quickly go through that. CMAI is a Carbon Market Association of India, and we are the leading industry body in the carbon market space. This slide really shows the ecosystem, that how industry is doing emission, and those emission need to offset by development of carbon projects and get the certificate and get it done. So we are a Section 8 company. We work closely with Niti Aayog. We also work closely with all the key ministries, Ministry of Environment, Power, MNRE, and we are stakeholder with all the ministries for developing Indian carbon market framework as well as international carbon market framework, Articles 6.2 and 6.4 as per the Paris Agreement. So as we understand that India is really large in terms of net zero ambitions, so we generally work with all the key stakeholders, starting from communities to banking institutions, to industries, to MSMEs also in large nowadays, and also the regulators and other in the bodies. Climate change, everybody knows, so I will skip the slide. So how the carbon market works, when we get one credit, when we offset emission reduction of 1 ton of carbon dioxide equivalent gases. So if you reduce 1 ton of carbon dioxide equivalent gases, we'll get one credit. And these are the 7 greenhouse gases, which is really causing climate change and heat in the market. And this is the history of carbon market development in the world, starting from 1992 UNFCCC, United Nations Framework. Then the Kyoto Protocol happened, then Paris Agreement. India has also signed the Paris Agreement. There are 2 kinds of carbon market. One is compliance-based, and second is the voluntary carbon market. So voluntary carbon market, India is already a leader right now with 30% share. So there's a $2 billion market is there. So we have around $0.6 to $0.75 billion market. And these are the various activities where we can generate climate finance, or you can say that green attributes. Like 6.2, there's a Paris Agreement, which is bilateral, multilateral collaboration between 2 countries. Then 6.4 is again the Paris Agreement as per UNFCCC guideline. Earlier it was CDM. Domestic carbon market has been launched by Bureau of Energy, Ministry of Power. Domestic voluntary market is also going to launch. Notification has come by Government of India. Green Credit Program is launched by Ministry of Environment, Forest and Climate Change. And the first Green Credit Program where we are also a stakeholder, one of the technical community stakeholder for afforestation and reforestation activities. And that there is a National Renewable Energy Certificate. There is a PAT scheme everybody knows. ORCIA is going to be a big one because Indian airline sector has to become under compliance very soon. Plastic credit is already there for national and international market, and voluntary carbon market is already existing. So we have multiple options as the industry cooperates to get the carbon credit or plastic credit and green credit. So India is already collaborating with few countries like Japan, Korea, Singapore, and Sweden and Germany. And that collaboration might help us to get to 10 to $13 billion in coming 5 years' time. Article 6.4, again, India has 17% share right now. Why I'm telling that? Because this is the market where India has already taken lead. And if the market will grow further, as we know that one day carbon market is going to reach $250 billion by 2050. And if you have 30% share, maintaining these shares, we'll able to get $75 to $80 billion market. So everybody knows about the Green Credit Program. So it's a well-announced program. And there is 8 sector has been announced in Green Credit Program, where the forestation and reforestation activities in the part of that. And so these are the areas where you're able to get green credit for industries, because government has already announced that CSR budget can also be utilized for Green Credit Program, for tree plantation, water management, sustainable agriculture, waste management, air pollution, mangroves, eco-mark leveling, and sustainable building and infrastructure, soil, water, air. So all these areas are going to create a great opportunity for corporates to achieve net zero goal, because Indian government has announced that green credit can also be utilized same as carbon credit. Government has already notified 13 technologies areas where we have already invited investment. And all these areas we have well discussed, starting from renewable energy storage, green hydrogen, battery storage, ammonia, CBG, sustainable aviation fuel. So here the large amount of investment is going to come from the country like Japan, Korea, and Singapore. And those collaboration, Government of India is already working with them. And the good part is that in certain areas, government has already announced that CSR spend can be utilized. And those CSR spend can be measured most effectively. And those CSR spend utilization in the carbon credit or green credit area will also help to improve the ESG score of the company. So we discuss about these are the methodologies globally available for compliance market and the voluntary market. So we work in both areas. And voluntary market, there is a verified carbon standard for US and gold standard for Switzerland, where India has a maximum number of share in these projects right now. And since we work with, like we discussed about the transparency and the integrity of the carbon credit part, this is the area where every project we need to work, starting from understanding project, audit, registry, and issuance of the credit. And those credit we can right now, see, we can also trade it outside India and generate high climate finance for corporate industry. So these are a few kind of projects for carbon credit. These are well-developed projects in India. One is that removal-based projects and reduction-based projects. Removal credit generally get very high price, and reduction credits are like renewable energy, community-based, green hydrogen, biofuels, ethanol, and EVs. So I'll just give you an example, like afforestation and all. Generally, few projects are already active in India regarding 20 to 50 credit per hectare. Mangroves, we can get 100 to 100 credit around per hectare. And Red Plus, there are few projects that are registered in India Northeast. They can get 30 to 60 credit per hectare. All these credits are really liked by petroleum companies and the big polluters like fossil fuel companies. We have a solar, we can get carbon credit for per megawatt, 1300, wind, 1400. And also, there's a biofuel is the biggest area where our Prime Minister is also announced the India Biofuel Alliance. And this area, there's a bioethanol manufacturing, landfill activities, biomass pelletization, CNG to bio-CNG, and biofuel switch from diesel. All these activity we can get carbon credit. Biochar is the most attractive area. Their credit rate is more than 100 in the world. And Indian, a lot of projects are coming in this area and able to get a lot of funding to the projects. Compressed biogas projects, again, government has Satat scheme and Govardhan scheme can get the credit in high credit, and we can get the break even all because of scheme and credit in 3 to 5 years time. So we're also doing a clean cooking initiative in India in multiple areas, and the 2 million household CMI's member is doing this project, and this is around Indian subcontinent, and this is a device. So all the small technology area, technology implementation part can play a very important role because they are saving 30 to 40% deforestation, and getting multiple benefit from environmental, social, and economic benefit. Transition of life, you can see that in the WOW project, meeting 8 to 9 SDG goals. And there are multiple areas where organization and the institute can get carbon credit, starting from all sectors. And CMI is happy to collaborate and help those corporates to get the fund. Thank you so much.
Thank you, Rajiv sir. I think it's a very detailed presentation and pretty helpful actually. I'm really sorry that we otherwise we will miss out actually. This presentation will not be there. So I think a lot of things are happening on the carbon trading side also, and a lot of areas have already noticed actually. So thank you once again for your acceptance. So friends, we have covered almost all the panel speakers, and they have deliberated very well. And I believe all the audience who have joined with us either on the Zoom or on the other social media channels, maybe LinkedIn, Facebook, and all, they must have the better understanding of the green financing or how the India can achieve the net zero transition with the help of the financial institutions. Green Bond Initiative or the Carbon Market Association, all these people, how they are helping the enabling that environment or enabling that financing also. Thank you to all the panel speakers. And now I would like to invite Jitendra Singh, Dr. Jitendra Singh, who is the Director General in the PhD Chamber of Commerce. And I'm thankful to Jitendra Ji for joining with us also, and thank you to PhD Chamber of Commerce for partnering with us on such an important topic. So thank you very much, Jitendra. Please. Yes, sir, you are on mute. Jitendra, you are on mute.
Thank you, Ashish. Thank you very much for offering this webinar to PhD in partnership. We have done great job in terms of understanding the nuances of carbon net zero and what is the role of banks, the companies, and investors in order to drive net zero transition. As we know that the soaring greenhouse gas emissions that threaten to damage the planet, which is beyond repair. Now, even the policymakers and regulators, not only in India but around the world, they are looking to banks, the fintechs, the investors, even to some innovators and startups also to lead the fight against climate change. And most, large institutional banks or NBFCs or fintechs, they have started to fight against this climate change. And also, this present, circumstances has, presented with all of us with unprecedented challenges. And this is also a unique opportunity which can actually help to transform all their companies into sustainable companies and also significantly expand their businesses. So for investors, for banks and fintech, companies, They need to become stewards of their customers' transition. They need to recognize that their role not only entails just organizational transformation, but key to successful transformation is very important. And this requires establishing a new value framework where you need to, help your relationship managers, your, fintech subordinates, the business correspondents, the business executives to become climate scientists. Climate scientists in terms of making people or making customers understand the nuts and bolts of this climate change, and systematically they can set up the carbon intelligent information systems. So the point is the middle market segment, particularly the SMEs, they're all struggling to identify the best starting point, or normally they are discouraged by the scope and complexity of this, carbon net zero. Right now, there are a lot of, different organizations, different sort of, uh, regulatory bodies also they are coming, and deciphering or understanding their rules or their notifications become sometimes a daunting task. So banks as well as fintechs as well as investors companies, even the carbon trading companies, they're ideally placed to provide the vital assistance the companies require to decarbonize and become net zero. So this transition to net zero economy, this will create new winners as well as some few losers in the market also. So winners will be those who will achieve this successful transformation. So at the same time as making the necessary internal changes to become net zero, the banks, the investors, the fintech companies, the startups, they need to engage with their customers, and they need to steward their transition to net zero by providing sector-specific decarbonization strategies as well as knowledge and appropriate products. And this will ensure an authentic transition for banks and customers alike, and also the emergence of winners tomorrow. So, Ms. Neha Kumar, Ms. Monica Kalia, Mr. Somajit Mandal, Mr. Rohit Kumar, and the moderator, Mr. Ashish Agarwal, for sparing their time and sharing their insights with the August audience. So, with this, thank you very much, and we look forward to have more associations with the entire community in the near future. Thank you very much.
Thank you, Jitendra ji. And so now we would like to end the session, and I would like to once again thank you to everybody for joining with us. And I'd like to thank you to the Surgeon team and PhD team for making it successful. And we hope that this topic is webinar on such topic actually. Thank you very much. Thank you, everybody. Thank you. Thank you.
Thank
Bye.
Thank
Thank
you.
you.
Thank you.
Thank you.